Hey, what's up, good people? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please do me a favor. Smash that like button. And also hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. Guys, if you want to keep up with me when I'm not on the airwaves of YouTube, get down in that description box. Click on that Richard Fain Millionaire Mentor Instagram link and give me a follow on Instagram, and then send me a DM to let me know that you're rocking with me, and so that I can say thank you. Guys, you know I appreciate y'all 1,000% for supporting me over these last almost 5 years. January 2025 will be 5 years I've been doing YouTube full time, doing edited videos, and then over the last year I've been concentrating more on live streams that turn into edited videos, or you can replay the live stream. So it's been crazy ride for me, guys. And I've learned so much about people. I've learned so much about myself. And most importantly, I've been able to help thousands and thousands and thousands and thousands of you guys get your mindset right and get yourself to this pot of gold at the end of the rainbow. That's the mission statement. Help people get their financial mind right, point them in the right direction to where that pot of gold at the end of the rainbow is. And that's what we've done over these last 5 years together. So I want to say thank you for being a partner with me, joining me on this epic financial journey. So thank you very much. And like I said, if you want to follow me on Instagram, I've been dropping some stuff on the Instagram channel, personal stuff that ain't got nothing to do with, the YouTube channel. The cars, man. I've been just dropping. Y'all know I love cars, so that's where I'm gonna be putting the car content and some traveling content. And also, we're gonna always have the financial stuff there. But if you wanna know kind of what I do when I'm not on YouTube, you gotta get over to my Instagram page and give me a follow on Instagram. Like I said, that link is down in the description box. Richard Fain Millionaire Mentor Instagram page. I'm getting ready to pick up a really special car here, sometime this week. Early next week, I potentially am going to be picking up a special car, and that's where I'm going to drop it at, is on the Instagram page. So follow me there for all stuff related to Richard Fain's personal stuff, my personal life, what I buy, what I don't buy. All that stuff is going to be on the Instagram page. So get over there and give me a follow if you don't mind. www.richardfain.net is the website. Been up about 5 months. You guys asked for a website. We gave it to you. And you guys have responded exponentially to it. I mean, you guys, over 350,000 of you guys have already landed on the homepage of the website, checked out the digital products. Over 1,000 of you guys have purchased digital products to help your collapse time frames get to your pot of gold at the end of the rainbow. Over almost 1,100 of you guys have joined the Wealth Builders. Y'all see the t-shirt, right? I'm gonna get my head out of focus, but see what I'm saying? Look at that, WB Wealth Builder. Listen, man, you gotta come join this movement on the Wealth Builders, right? We got a fastest growing financial community on Patreon, guys. Fastest growing financial community on Patreon. Navidians, Wealth Builders, WB baby. If you want to be a WB, a wealth builder, then all I'm going to ask you to do is go to the website, second link in the description box. Listen, man, there's going to be a membership button. There's going to be a join button. Listen, man, if you want to get around wealth builders, what we're going to be talking about today, man, is going to put you in position to get super rich. Now, if you want to be around another 1,100 people who are headed in the same direction, you better go join the Wealth Builders. Because what we're going to be talking about here today, you're going to need some support. You're going to need some people that on your side. You're going to be needing people that's going to be pouring into you positivity, pouring into you how to build wealth, pouring into you discipline, consistency, patience. You're going to need people to pour into you. You're not going to be able to do this on your own. Get yourself over to the Wealth Builders and join our financial community so we can pour into you and you can pour into us. This is how we're going to get to wealth, guys. This is how we're going to transfer wealth from the 1% to us. This is how we're going to transfer wealth from NVIDIA, S&P 500 ETFs, information technology ETFs, other big boy blue chip individual stuff. We're going to transfer this wealth to us through what's getting ready to happen over these next 5 years, man. And it starts right now with these Fed rate cuts. Fed rate cuts. We're going to talk about some historical information, what happens to the stock market when Fed cut rates. We're going to talk about that in a minute. Guys, I keep telling y'all, rates go down, growth stocks go up in value. I'm just telling you, that's my opinion. But the data is going to support that. So if you don't want to be out here hanging on your own, trying to do this on your own, come join the Wealth Builders. Like I said, second link down in the description box. Click on that website link, Richard Fain Millionaire Mentor website. Check out them 10 digital products that I've already handpicked for you guys. Over 1,000 of you guys have already decided, listen, I'm going to grab some of these digital products so I can get my knowledge game up. Once I get my knowledge game up, then I'm more what? Confident. And when I'm more confident, what do? I execute. Lack of knowledge means lack of confidence, means lack of execution, means you stay broke. Y'all know how this game works. More knowledge, more confidence, more execution. That's what the digital product's going to do for you. That's what the Wealth Builders financial community will do for you. It's going to give you more knowledge. Therefore, you have more confidence in your decision making. When I have more confidence in my decision making, what do? I execute. And when I execute big boy blue chip, long term, what do? I build wealth. That's what we do, guys. We build wealth. But we build wealth that does what? Generate passive income. The whole point of building wealth is so that I don't have to work for somebody for the rest of my life. And I get to do all the things I want to do. If I want to go get my toenails painted every day for the rest of my life, guess what I get to do? I get to go get my toenails painted every day for the rest of my life, and I ain't got to worry about how to pay for it. Ooh, I love that. I love that. You mean to tell me, Richard, I can give up some stuff in the short term. I can give up stuff in the short term that really I don't need anyways. I can just give that stuff up. I don't need to go out to eat 10 times a month. I don't need to go take 4 or 5 excessive vacations every year. I don't need to go out and buy a new car every 2 years. You mean to tell me I can give up all that stuff in the short term and have infinite wealth in the long term? Where I can go do whatever I want to do and my wealth will pay for it, and I ain't got to go clock in at somebody's job? Yeah, I'm telling you that. I'm telling you that's what you can do if you put your mind to it, but you better get yourself around a group of people who's going to help you do that. That's where the Wealth Builders come in. So get yourself to the website, join the Wealth Builders. Next thing, Mumu. My self-directed brokerage app I'm using over the next 10 years to do what? 10x the net worth, baby. 10x the net worth. I enjoy my life, guys. I enjoy my life because I don't have to worry about money. See, I don't have to worry about money. I ain't got to worry about how I'm going to pay for my insurance. I ain't got to worry about how I'm going to send my daughter to college. I ain't got to worry about how I'm going to keep the lights on. You know why I don't have to worry about any of that stuff? It's because I paid the financial price for 30 years. Oh, Richard, I ain't got 30 years. You don't need 30 years. You don't need 30 years. You need it's 1 year, 2 years, 5 years, 10 years. Well, it's up to you. My wealth building process took me basically when I was 50 years old, I was done. I'm 56, so for 6 years, I just been able to do everything I want to do. I haven't went to work for somebody in 6 years. I have not went to work for any other human being in 6 years. I've been able to sit my butt at home in front of this iPhone 13 Pro. I don't know, it was probably an iPhone 10 at that time. But I've been able to sit in front of this little iPhone and share with you my life experiences when it comes to financials for over 6 years. Being my own boss, making my own schedule, being able to travel and do whatever I want to do. Why? Because I paid the price. I gave up buying stuff that I didn't need when I was 26 years old, and I did it till I was 50. But guess what? I do it all over again because I get to do whatever I want to do now for the rest of my life. I ain't got to worry about no financial stress in my life. That's priceless, guys. Well, I don't need millions, Richard. I don't need it. Well, don't get millions. Give it away. Make all the millions and give it away to the homeless. Give it away to charities. Give it away to your family. Give it away. Nobody says you need to be buried with millions of dollars. Nobody says that. I'm not planning on being buried with millions of dollars. I plan on enjoying my time here. And when I'm gone, whatever's left, guess what? Goes to my kids. And then they get to do whatever they want to. My point is this, guys. If you want complete independence, if you want to be able to completely realize your full financial potential, if you want to really realize your purpose in this life, what your passions are, you got to be able to go chase these things and not worry about how you're going to pay for anything. I cannot chase my passion when I got the lights about ready to get cut off. I cannot chase my passions or my purpose if I don't know how my kids gonna eat the next day. I can't chase nothing. I gotta go do what I gotta do. I can't be chasing my passions when I got people dependent upon me to go out and work. If you really want to reach your full financial potential, if you really want to reach your passions and your purpose in this life, why you were actually put here. See, a lot of us never reach that. We never reach we never get to experience why we really was put here to do. Why? Because we don't build no wealth. And see, wealth is required to be able to go chase things that don't create money. And maybe that's where your real passion is. Maybe that's where your real passion is. Maybe your real passion is going out there and saving little sea turtles. Saving little sea turtles that done hatched on the thing, and you don't want the seagulls to come down and pick them up and take them and eat them. Maybe that's your passion, but ain't no money in that. Ain't no money in that. There's nobody gonna pay you for that. No one's gonna pay you to go out there and save little baby sea turtles. Nobody. So guess what? You better have some wealth that can generate income to take care of you while you go out there and save little baby sea turtles. See, that's what I'm talking about, guys, with this wealth thing. It allows you to be able to go do that, what you really want to do. And you don't have to worry about how you're going to pay for the rest of your lifestyle. But if you ain't got no wealth, you can't go out there and save little baby sea turtles. You got to go to some job that you hate. That's where you got to go because that's what keeps on the lights. That's what put the food in the belly. That's what turns on the heat in the winter. All I'm telling you guys is chase this freedom thing. Go get this freedom thing so you're able to free up yourself to go do things that you really want to do. That's what you got to do. Like I said, get down in that description box and click on that Mumu link. Good folks at Mumu got a great offer for you. You're going to need a brokerage account, guys, to build this wealth. This exponential wealth I'm getting ready to talk about, you're going to need a financial apparatus. You're going to need an apparatus. That apparatus is a brokerage account. You're going to need an apparatus. And this financial apparatus I'm using is called Mumu. It's a self-directed brokerage app. They got a lot of accolades, best brokerage app, best this, best that. That's not the reason I use it. The reason I use it is because it's simple. There are no commissions on my trades. They don't charge me any monthly maintenance fees or annual maintenance fees or service fees. They don't charge me any of that. They got world-class customer service, in my opinion. Millions and millions and millions and millions of people use this app. I'm one of the millions that use it, and I'm happy with it, so I'm more than willing to share it with my audience. Now, I have an affiliate relationship with these people, so I get a little cha-ching, a little referral compensation every time somebody sign up. Okay, great. Nothing wrong with that. But the good news is you can do that too. Because when you sign up and you put your money in, you start using the app and you like it, guess what you can do? You can take that concept and share it with your family and friends. You can share it with the people at your church. You can share it with the people at your work. And guess what Mumu folks gonna do? They're gonna give you a little cha-ching. But this is how it works. You like the app, you use it, you share it with family and friends, and they compensate you through free stock. Nothing wrong with that, guys. The real world we live in is a win-win. I'm looking for a win-win. It's a win-win. It's a win-win for you. Try the app out. They're going to give you up to 15 free stocks for trying it out. Put $100 in your new brokerage account, they give you 5 free stocks. You put $1,000 in your new brokerage account, they give you 15 free stocks. Now this is what you need to do. You need to learn how to use the app. And that's where you're going to use a guy like me. You're going to send an email to me through my website and say, hey, Richard, I opened this Mumu brokerage app. I put my money in it. I'm ready to build some wealth so that I don't have to work for somebody for the rest of my life, so I can go out and save little sea turtles and not have to worry about how I'm gonna keep my lights on, because they're not gonna pay me to go save little baby sea turtles. I gotta figure out how to be able to keep the lights on and keep the refrigerator full of food, keep some gas in my car, pay for all this stuff, my insurance and all this stuff. I gotta figure out how to pay for all this stuff so I can go save little baby sea turtles. How you gonna do that? You're gonna do that using your Mumu brokerage app. Because what you're gonna do is, you're gonna take some of this money that you're spending on crap that don't matter. You're gonna stop spending money on crap, and you're gonna redirect them dollars, and you're gonna put it in your Mumu account, and you're gonna start buying big boy blue chip. And you're just gonna do that every single month, every single year, till you build your assets high enough that you can go generate income with those assets, and now you can go out and save little baby sea turtles. All over the world. You can go all over the world saving little baby sea turtles. That's right. See, this is what wealth is about, guys. It's not about the fancy cars. It's not about the fancy houses. It's not about jets and yachts and all of that stuff for most of us. Really, it's about saving baby sea turtles. That's really what wealth does for us, ordinary people. Ordinary guy like me, I get to be able to do whatever I want to do and not have to worry about how I'm going to pay for it. I can go volunteer for the housing authority in my local town and donate my time. I can go coach Little League football. I can go speak to a group of kids. I can go do these things, man, without having worry about being compensated for it or worry about missing work and getting fired. I ain't got to worry about that. Why? Because I build assets. I build assets that multiply themselves while I sleep. And I use the Mumu brokerage app to do it. So if you want to be a part of that gang, get yourself down in the description box and click on that Mumu link and become part of the gang, the Mumu gang. It's millions and millions of us. All doing what? Leaving the dependence of the matrix and moving ourselves in an independent situation where we control our wealth. One thing I can tell you guys, I'm gonna do what I gotta do. Y'all know this, I'm a consistent guy. It don't faze me. It don't faze me. I just keep going and keep going. Why? Because that's how I'm wired. I'm one of these guys, I'm wired. I believe in myself. I'm unique. I'm the only human being on this earth like me. There ain't no second Richard Fain. I'm unique. I'm special. And not one human being on this planet gonna take that from me, ever. That's how you need to think in your life. There ain't nobody on this planet will take my uniqueness from me. I'm special. I'm the only one of me. You're the only one of you. Do not let anybody take that specialness out of you. Matter of fact, what you need to do is cultivate that. You need to buy into it. See, a lot of y'all ain't bought into your own worth. How is somebody else gonna think you're worth anything if you ain't gonna think you're worth anything? You gotta buy into your worth. Don't worry about what your next door neighbor or some other person says. You need to buy into your worth. You're special, you're unique. There's nobody else out of 8 billion people on this planet like you. You got to decide. You're going to build wealth and realize who you really are and be able to go out and do the things that you really need to do in order to reach your full potential in this life. You need assets. I'm walking you through a blueprint to get you these assets, but you got to be willing to listen and you got to be willing to change. And you gotta be willing to give up what other people think about you. See, a lot of y'all broke and ain't got no assets because you worried about what the next person gonna think about you. And what do they call that? Pride. One of your 3 financial killers is pride. Stop being prideful, guys. Leave that pride to the side. Ain't no, listen, I'm telling you, it don't catch up to you till it catch up to you. So do me a big favor, get down in the description box and click on that Mumu link. Open up that Mumu account today. Go get that free stock. Go get that free money. Send me an email through the website. Richard, I opened my Mumu account. I'm ready to reach my full financial potential. I'm ready to build some wealth. I'm ready to give up all of these things that I'm buying that will not build wealth for me. I'm going to redirect that money. I'm going to put it in my Mumu account. I'm going to buy big boy blue chip. I'm going to follow the blueprint. And I'm willing to do that with you and the rest of the wealth builders for as long as it takes. Right? That's what you got to, that's the commitment. If you ain't willing to make that commitment, you're at the wrong channel. Go find some other channel where nobody don't want you to do nothing but buy product from them. They don't want you to do anything but go down there in a webinar. They don't want you to do anything other than whatever these people ask y'all to do. Y'all more than willing to do that because you think they're going to do something for you so you don't have to do something. I'm going to pay the money because I don't want to do it. They're going to make me rich and I ain't got to do nothing but just wake up in the morning and I'm rich. No, you're going to do something to make money, guys. That's up to you. But on this channel, it's about you doing what you need to do. It ain't about me doing anything for you. It's about what you need to do for you. Because you're the only one that's going to build wealth. Not me. I can't build wealth for you. I'm not a financial advisor. I don't take people's money and invest it for them. I'm just a regular guy on YouTube telling you, hey, you can take your own power back and build your own wealth. You can if you choose to. Now, if you want to sit here and be broke for the rest of your life, then sit here and be broke. If you want to sit here and do stupid stuff for the rest of your life, sit here and do stupid stuff. Definition of insanity, guys, is continuing to do the same old stupid stuff every day, but you expect brilliant results. Oh, I'm going to do stupid stuff every day, but I expect to get brilliant results. No. What's stupid is coming into another man's live chat, doing the same old stupid stuff every day, thinking you're going to create people from watching my YouTube channel. You're not. Guys, that's insanity. Same with you guys out here, guys. It's up to you what you need to do. You can continue to do stupid stuff every day that don't build no wealth, or you can build wealth. That's up to you. And I know some of y'all gonna have your little feelings hurt because y'all know how we are in this country. Oh, he called me stupid. No, I'm not calling you stupid. I'm saying the stuff that you do is stupid. It's a difference. I would never call anybody stupid. But the things people do, the activities that they do, thinking that they're doing activities that are going to build wealth, are stupid. Give up those stupid activities. Be more productive with your time. Don't sit on the couch all day watching grown men run up and down in the field, touching each other and tackling each other. Stop doing that. They are millionaires. You're not. You should be taking that time driving Uber or Lyft or DoorDash or creating an online business or pressure washing somebody's drop, whatever you need to do to make more money so you can invest and get to your wealth faster, that's what you should be doing. See, this is what I'm talking about these activities we do. Those are the things that are stupid. It's stupid to sit on the couch for 10 hours on a weekend watching millionaires run up and down a field while you're not a millionaire. That's a stupid activity. It's a stupid activity. What I should be doing is taking those 10 hours and going out and building wealth for myself, creating some income to put into these big boy blue chips over the next 5 years and build me some wealth. Not sitting on the couch eating Doritos and Cheetos, watching some guy run up and down the field. That's a millionaire. You got guys out here you watching that made $300 million and they haven't won one playoff game. And they worth $300 million. Ain't won one playoff game. Those are the guys you watching. While you sitting here, barely can keep the lights on. But yet and still, you think that's a good activity. That's a good use of your time. It's not. Got to stop that, guys. The truth is the truth, and I know it hurts. But I'm a truth teller. If you don't like it, don't watch my channel. All right, let's move into this Fed stuff. Let's dive into the Fed stuff. We know the Fed started their meeting today. Tuesday, September 17th. See, that day right there, I'm going to remember for a while because this is the day it all starts to change. It starts to change. All of these big boy blue chips I've been buying in dip season through DCA and lump sum investing. I've been buying all these big boy blue chips. I believe now those big boy blue chips start to turn green. That don't mean we don't have red days, but I believe they start to turn green a little more. And they start going up in value because history tells me when interest rates start coming down, it creates more opportunity for the economy. It creates more opportunity for individuals, consumers. It also creates more opportunity for businesses. See, anytime a new money supply is reintroduced to our economy, guys, and borrowing is a money supply. Whether you think it is or not, it is. Borrowing money, guys, is an important money supply in our economy. It is. And the cheaper people can borrow it, the more they borrow. And if they're smart, they take that borrowed money and they go buy assets that increase in value and return to them more than what they borrowed the money for. See, if you're smart, that's what you'll do. And guess what? Businesses do the same thing. All these businesses out here that don't want to be behind the 8 ball in this artificial intelligence boom. Guess what they're going to do as these interest rates come down? They're going to go to their banks, to their corporate banker and say, hey guys, we got an opportunity here to increase our capacity, be more efficient. But we need to borrow some money in order to put some things in place to do that. That's what they're going to do. They're going to take this big sum of money and they're going to put it into their growth. That's why growth stocks do better in low interest rate environments. Guess who else does better in low interest rate environments? Small cap stocks. Why? Because these are companies that want to grow. They want to become growth companies. Small cap companies want to become large cap companies, guys. You do understand that, right? It does make sense, right? If I'm a small company, at some point I want to be a large company. How do I go from a small company to a large company? I borrow money. And I take that money and do what with it? I invest it in my growth, in expansion, in hiring people, building out my artificial intelligence platforms. That's what I do with that money. So interest rates, guys, are a very important piece to our economy. It's a financial tool that, if used correctly, can work wonders. So I'm telling you, it starts today. The Fed is meeting. Right now, they're meeting. And they're saying, you know that guy on YouTube, Richard Fain? This is what Jay Powell is saying. Jay Powell is saying, you know that guy, Richard Fain on YouTube? Man, I like that guy. I like that guy. That guy knows how to borrow money and turn that money into more money. I like that guy. Let's go ahead and reduce these rates so him and the wealth builders can go out and strategically do what they need to do in order to do what? OPM. See, Jay Powell got my back. Jay Powell understand that the little fellas, the little gals, we need to be able to build wealth too. So Jay Powell going to reduce these rates. Him and the FOMC, they're going to start tomorrow. They're going to reduce rates by 50, 100 basis points maybe. I don't know. We'll see. We'll see. Up in the air, right? We don't know. But we do know they're going to reduce. Could it be 100 basis points? I don't know. We'll see. We got a former Fed member who is weighing in on what he believes the rate cut should be. We'll hit him real quick. But the key here is interest rates are getting ready to fall. And we're going to also talk about what history says when interest rates fall. What happens to the stock market? What happens to the S&P? We're going to look at that too, right? So let's dive on in. We're going to start with the former Fed guy. I want y'all to hear what he has to say when it comes to interest rates and what he believes interest rates should be doing. Here it is right here. New York Fed chief Bill Dudley sees big Fed rate cut. So this is a former Fed guy, FOMC guy. Former New York Fed president Bill Dudley is a dove on Fed policy. Now, of course, y'all know this guy's a 1%er, right? You don't get on the FOMC unless you're a 1%er. Y'all understand that? So he's rich. He's wealthy. You do not get on the FOMC unless you're a 1%er. And you know something about money. You know how to build wealth. Why would they let somebody on there that don't know how to build wealth? They're going to put people on there that know how to build wealth. Here's what old Bill had to say. Bill said this. He thought the Fed should begin trimming rates in July. Remember, if we go back to July, guys, I was telling y'all the Fed should have been cutting rates then. They should have been slashing 25 basis points in July, but they didn't. They held off. Okay? So Bill agreed with me. Y'all see how I call him Bill? Because I believe, let's keep moving. And he thinks the Fed should and will go 50 basis points on Wednesday. I don't know what they're going to do, guys, but I will tell you this. As we get closer, the market increases the percentage that we go 50 basis points. I'm just saying, I don't know if we'll do that, but here's what Bill is saying. Former Fed chief, president of the New York Fed. This is what he's saying. The logic supporting a 50 basis point cut is compelling. He wrote in a commentary on Bloomberg. The two objectives of the Fed's dual mandate, I keep telling y'all this, I've told y'all this time and time again, what the mandates are, the four mandates. What are the four mandates of the Fed? Here are the two top ones, though, and then we're going to give you the other two. Here are the two top ones. The first mandate is what? Price stability in our economy. We need to make sure everybody that lives here in the United States has ability to buy the goods and services they need at a fair price, at a reasonable price. That's what they call price stability. Everybody should be able to go buy groceries. Everybody should be able to keep their lights on. Everybody should be able to put gasoline in their car. Everybody should be able to have a roof over their head. See, that's price stability, guys. That's the number one mandate of the Federal Reserve. Number one mandate. Second mandate, maximize sustainable employment. That's the second mandate. Everybody living in America who wants to should have the ability to have a job, to create income for themselves. and then take a part of that income, in my opinion, and put it in assets to build wealth. So those are your two primary mandates of the Federal Reserve: price stability, maximum sustainable employment. The other two are going to be to regulate, right? To regulate banks and to make sure our payment system in this country works. Those are the other two. Monitor and regulate banks and make sure our payment system in this country works. Those are your four mandates of the Federal Reserve. So this is what Bill Dudley, former Fed president, New York, this is what he's saying. Two objectives of the Fed, dual mandate: price stability, maximum sustainable employment, have come into much closer balance. It's much closer. That suggests monetary policy should be neutral. What does he mean by monetary policy should be neutral? It shouldn't be at the maximum it is right now. Come down some to neutral. Not too low, not too high, but in the middle. But just in the middle. In the middle, baby. So what does that mean? That 5.5% Fed funds rate needs to come down. That's all Bill Dudley is saying. It needs to be neutral. Neutral means rates should neither depress nor lift the economy. So what he's saying is, what you don't want to do is move it down too fast and you introduce too much money to the economy, and then all of a sudden inflation goes back up. Because why? What do we create when we introduce too much money to our economy? What happens to the economy? Our supply versus demand gets out of whack. You get more demand and you got supply. And what does that do? When you got more demand than supply, what happens? Prices go up. What does that do? Inflation goes up. So you don't want to come out tomorrow and cut rates by 200 basis points. No, you don't want to do that. What you want to do is you want to bring these rates down to a neutral position. And in my opinion, that neutral position is about 200 basis points over the next 12 to 18 months. You want to bring these rates down to neutral. Therefore, it does not hurt the economy, or it doesn't over boom the economy and increase inflation. You don't hurt the economy by keeping them too high, because you risk recession. You don't bring them down too low too fast, and you risk inflation. So that's where you got to come down to a neutral, where you don't make inflation go up, but you also keep the economy out of recession. That's neutral. All right? Neutral means rates would neither depress nor lift the economy, yet short-term interest rates remain far above neutral. This is what he's saying. This disparity needs to be corrected as quickly as possible, Dudley said. So basically what he's telling you, this little 25 basis points that people think they're going to do ain't enough. They need to come out the gate with 50 right out the gate, which wouldn't be bad. Which wouldn't be bad. Wouldn't be bad at all. So the Atlanta Fed model shows the neutral point. Check this out now. Here's what you got to pay attention to. See, this is where you build wealth. Here's where you build wealth now. Here's where this information helps you build wealth and makes you a better investor right now. This information right here from the Atlanta Fed rate models neutral rate. They're going to come out with what they believe the neutral rate should be. Now, that doesn't mean the Fed will listen to them, but hey, this is where they believe the neutral rate should be. So what you should be doing at 5.5%, when you know that is not the neutral rate, that's too high. You already know that's too high. You know 5.5 is too high, but what is neutral? Here we go. Atlanta Fed models show the neutral point for the Atlanta Fed models show the neutral point for the federal funds rate ranges from 3.5 to 4.8. The Fed funds target rate overnight interbank loan rate is 5.25 to 5.5, right? So they're saying 3.5 to 4.8 would be the neutral rate. I believe, and again, nobody cares what I believe, but I believe it should be more towards 3.5, which represents about 200 basis points. That's what I believe. What represents about 200 basis points over the next 12 to 18 months. Will that happen? I don't know. But it could. But it could. So he's basically saying this. One could even argue that the downside risks of employment outweigh the upside risks of inflation. This is what Dudley is saying. He's saying what's more important right now. What's more important right now is jobs, not inflation. So if you're going to err on the side lowering them too low to save jobs. You want to save jobs. In his opinion, that's more important right now than inflation. One could even argue that the downside risk to employment outweigh the upside risk to inflation. So in my opinion, he's basically saying jobs are more important right now. Maximizing sustainable employment is more important than worrying about inflation. That's what he's saying. Because already we know the Fed has kept the rate steady at 5.5 since July 2023, and we have not seen any significant movement in inflation. But what we have seen over the last year is a significant move downward in unemployment. A significant move downward in jobs being added to the economy and a significant move upwards in unemployment. Beginning of the year, where was unemployment? 3.4%. Now, all of a sudden, it's at 4.2%. But end of the year, we were adding, 200, 300,000 jobs a month. What do we add now? Barely adding 100. The guy is right on the point here. It's right there looking them right in the face. If you don't do something fast, you're going to mess around and be under 100,000 jobs per month, and you're going to have unemployment at 4.5%. And it's too late then. It's too late. It's too late. That's what he's saying. It's too late. So you got to get really, really deeper on the rate cut. Will they do that? Who knows? Here we go. One could even argue that the downside risks to employment outweigh the upside risk to inflation. A 50 basis point cut would fit well with the Fed officials' next set of economic projections, which they will publish this week. Markets anticipate a total Fed reduction of at least 100 basis points by the end of 2024. Dudley noted monetary policy is tight when it should be neutral or even easy, he said. A bigger move now makes it easier for the Fed to align its projections with market expectations, rather than delivering an unpleasant surprise not warranted by the economic outlook. There you go. That's coming from a former Fed president who knows the inner workings of the Federal Reserve and what they do. And I think it makes sense, in my opinion. It makes a lot of sense. It makes a lot of sense. Let's get a 50 basis point rate cut. Let's get 100 by the end of the year. And then let's go into 2025 and let's cut this thing by another 100 to 125 and get to a 3.5 neutral rate and just sit there for a little while to see what the economy does, see what labor does, see what inflation does. Let's just sit there for a while, just like we did at 5.5. Let's get it to neutral and keep it there for a year. And let's see what each one of those do. Let's see what labor does. Let's see what inflation does. That's the game plan. Get this thing to neutral and stay there. And I believe neutral is 3.5%. So the next year, next 18 months, if we can get this thing down to 3.5 neutral, that's 200 basis points. I think that sends growth stocks much, much higher over the next 12 to 18 months. And that's where we're going to transfer some wealth to ourselves. So over the next couple of months, guys, we should, in my opinion, what I'm going to be doing is continuing to buy the dip. Now, continuing to buy the dip, guys, is different for me, is maybe different than what you think. See, a lot of y'all think buying the dip means I'm going to sit on the sideline and try to predict when the dip coming. I'm going to sit here and like Nostradamus or some fortune teller or some person that can see into the future. I'm going to sit here for 2 weeks and wait for the dip. I'm going to keep my money in my savings account for, no, that's not the dip I'm talking about. I don't know what you're talking about, but what I'm talking about is dollar cost averaging, because we're in dip season right now. Everything's lower than it was 6 months ago. Everything's lower than it was 3 months ago. So it's a dip season by virtue of it being lower than it was 3 months ago. You trying to wait for some fantasy number. I'm going to sit here and wait till it gets to 90 a share. The guy on YouTube said, just sit here for 2 weeks and wait till it gets to 90 a share. You're going to miss everything. You're missing the point about building wealth through DCA. That's against DCA. See, being against DCA is trying to time the market. That's not DCA. DCA is when you're time in the market. Everything's discounted right now. If you believe it's going higher, perfect opportunity. That's the way I look at it. Others will disagree, and that's okay. But I've been doing this and done very well. So I'm not going to change my game plan for nobody, because my game plan works. My game plan works. My game plan created a 7-figure net worth in stocks and ETFs. It works. So you do whatever you want to do and see where you get with your net worth. I'm going to do what I've done for 30 years, and I know where I've gotten with my net worth because it's right there. It's there. So I'm going to keep doing that. And to those that want to follow that traditional investing, buying and hold, big boy blue chip long term, hey man, introduce it to yourself. It works, but you got to be patient, you got to be consistent, and you got to be disciplined, or it won't work. It will not work if you're not those 3 things. And I know people here just do all kind of stuff, right? I see people doing all kind of stuff. Oh, no, I'm going to sit here and wait until it gets down to 75 a share. I'm going to just wait. I understand they don't know anything about building wealth. No, because if you're just sitting here waiting on something, that's not building wealth. You're just waiting. Building wealth is actively in investments, right? See, building wealth is about being active, not sitting here waiting on something that may or may not happen, right? Building wealth is about actively doing something every day to increase your net worth. Now, if I'm in this thing for like 2 seconds and I just want to sit here and keep my fingers crossed that something come down to 70 a share and I can buy it and it go to 100 a share and I'm going to sell it, that's a totally different strategy. That's not a strategy I participate in. I participate in the strategy of traditional investing, buy and hold, big boy blue chip, long term. That's the strategy that's worked for me and works for millions and millions and millions and millions of people around the world, right? In America, what do we have? We have 22 million millionaires in America. The problem is we got 350 million people in the country. We got 22 million millionaires. Are you one of them? This is what you need to be asking yourself. And I know what most people are going to say, I don't want to be a millionaire. That's because you're not one. I've never heard a millionaire say he don't want to be a millionaire. I've never seen somebody that's a millionaire say, I don't want to be a millionaire. The only people that say they don't want to be a millionaire are people that aren't millionaires. Y'all know I'm telling the truth. The only people who say I don't want to be a millionaire are people who are not millionaires. You never see somebody that is a millionaire say they don't want to be one. They may not talk about that they're a millionaire, but they never come out and say, I don't want to be one. I mean, that just don't make no sense. Why would I not want to be a millionaire? Now, I may not want the world to know I'm a millionaire, but to say I don't want to be one and make life easier for myself, that doesn't mean it's going to make me happy. But what it does mean is it gives me ability to go out and chase the things that can make me happy that has nothing to do with money. It's a tool. Being a millionaire and having money and having wealth is just a tool to allow me to go out and chase my purpose and my passion and help people. If I wasn't a millionaire, if I didn't have wealth, I couldn't do that because I'd be stuck behind somebody's desk 8 to 10 hours a day making them rich. So this whole notion of, oh, that's all this guy talks about is being a millionaire, that only comes from people that ain't millionaires, guys. That's it. It only comes from people who are not millionaires and have not figured out the reason they're not a millionaire is because of them. They'll blame everybody else, but the real reason, if you're not financially free right now, guys, if you don't have financial freedom in your life, it's nobody's fault but yours. The good news is you can change that today. I'm giving you the evidence right now what's getting ready to happen to these rates. Now let's talk about what happens to the stock market historically when these rates come down. I'm gonna just paint the picture for you so you're crystal clear on what's gonna happen. So 6 months from now when I talk about it and say I told you so, you'll understand. Let's talk about it right now. Let's give you what history says. Not what Richard Fain says. This is what history says about rate cuts and the stock market. The Fed may cut interest rates this week. History says stocks will do this next. Here we go. Here we go. The long-awaited moment has arrived. The Federal Reserve is meeting this week, and economists are predicting policymakers will launch the first interest rate cut in 4 years to calm raging inflation, and since has lifted the benchmark rate 11 times, leaving it at 5.5% today. That is the highest level in more than 20 years. These moves have done their job. With inflation dropping over the period, right now, it's at 2.5%. and nearing the Fed's goal of 2%. Why that level? Because it is most consistent with the Federal Reserve's mandate, like I just told you a few seconds ago, most consistent with the Federal Reserve's mandate for maximum employment and price stability. So economists and traders have been speculating that on Wednesday, the Fed will lower the benchmark rate by at least 25 basis points. And some even predict 50-point cut. As an investor in the stock market, you may be wondering what the market will do following the Fed's move. Let's look to history for some clues. Now, again, guys, this is history. That don't mean it's going to happen. Okay? So don't, it ain't no gotcha moment. I'm just telling you what history is saying. This is what they're walking you through, what history has done when rates have been lower. Doesn't mean it's going to happen, but it could. History says it's possible. Why is a rate cut such a big deal for stocks? Let's talk about that. Because I just want to walk you guys through this thing for some of you beginners in here and don't know what's really going on. And then if you're watching the live chat, you see a lot of knuckleheads in there. They don't know what's going on. They broke. They just here to disrupt. You got to understand that, guys. Anytime someone's trying to do good in this world, there will always be evil that tries to come in and disrupt. That's the world we live in. It's a world of good and evil. All I ask you to do is focus on the good. There's a reason I allow a lot of this stuff to happen. So please focus on something that will get you to your pot of gold at the end of the rainbow. Don't be distracted. That's the enemy. That's the enemy. See, anytime you have a group of people that come together for positive, there are always enemies that try to come and infiltrate. So if you're not serving good, who are you serving? You're serving evil. So either you serve good or you serve evil. I serve good. And no weapon formed against me, no weapon formed against me will take me down. Why? Because I got the Creator on my side. So all I'm telling you guys is focus in on changing your life. Forget this crazy stuff. There will always be good and evil, guys. Anything, I promise you, anything you try to do good, there will be countered by evil. It's the world we live in from the beginning of times. So just understand that anything you try to do good, evil will come. Evil will come. You just got to decide which one you want to believe. Do you want to believe good or do you want to believe evil? That's up to you. I can't make that decision for you. You got to make that decision. But guess what? You're going to have to live with that decision though. So choose carefully. Choose carefully. So let's move on. Why is a rate cut such a big deal for stocks? First, let's consider why a rate cut is such a big deal for the stock market in general and for investors in particular. Higher rates can hurt corporate earnings and investor appetite for stocks due to a couple of factors. As the Fed funds rate goes up, so do other borrowing costs for individuals and companies. For example, a high growth company relying on loans to build their businesses will see these expenses climb. As a result, potential investors may worry about their ability to fund growth and may stay away from these sorts of stocks. As for individuals, higher borrowing costs eat into their budget. And that means they probably won't have as much discretionary income to spend. Did you catch that? This is what I've been telling you guys all along. Higher these rates are will hurt growth companies because they don't have the ability to borrow money cheaply to put into their growth. Growth companies borrow money to grow. When it becomes too expensive to borrow the money, they stop growing. AKA investors say, well, why would I put my money into a company that's not growing? Therefore, they don't get people to buy their stock. Individuals, consumers, same thing. If it's going to cost me 3 or 4% extra to get this home equity line, I'm not going to do it. If it's going to cost me 2 to 3% higher to get this car loan, I'm not going to do it. Therefore, guess what? I don't make an impact on our economy because I'm not buying things because it's too expensive for me to borrow money to buy them. So our economy suffers. Companies suffer in high interest rate environments. That's basically what they're saying right here. Let's move on. Investors seeing this unfold often lose confidence in stocks. Most vulnerable in this sort of environment. They might hesitate to buy shares of those young growth companies, often technology players, as they may stay away from companies such as those in entertainment or travel that rely on discretionary spending. That's why across the board, guys, when you see rates as high as they've been, you've seen a lot of different industries that require discretionary spending from consumers do worse. If I'm trying to keep the lights on, I can't take the family to the movies. That's all I'm saying. So as an investor, I'm looking at these growth companies and I'm saying, okay, but they ain't growing. I can't invest no money in these companies. I got to find somewhere else to put my money. How about I put it in U.S. Treasuries for right now? How about I put it in my high yield money market for right now and get me 4 or 5% and wait till this thing blows over. And then when they start growing again, I'll jump back in. AKA when them rates come down, they go borrow that cheap money, they put it into growth, they start growing again. That's why growth stocks do well when rates are down. Let's keep moving. Investors might even rein in their investments in the stock market as a whole and opt for investments that tend to flourish in higher interest rate environments such as bonds. Why do you guys think the U.S. Treasury bonds have done so well? Why? Because their interest rates are higher now because the Fed funds rate is higher. When the Fed fund rate starts going down, bond rates are going to go down. Money market rates are going to go down because they're tied to the short-term interest rate. So a lot of folks have said, you know something? Move my money to bonds. Put it in the 2-year. If you know 6 months ago, you could get 4 something in a 2-year. It's protected 100%, and you wait this thing out. A lot of folks did that. A lot of folks that rely on their wealth to take care of them got scared and said, you know something, this boom or bust thing right now, we're in an economy, this boom or bust thing, we're in these stocks, I can't take it. I need my principal protected. Get it out of there and put it in bonds, and I'll take the 4% for 2 years until this thing blows over. A lot of wealthy people did that, guys, because they need to protect their wealth, because their wealth takes care of them. That's why bonds were so attractive. Of course, as interest rates fall, the situation shifts. Listen carefully, guys. Of course, as interest rates fall, the situation shifts, with borrowing becoming easier and cheaper for companies and individuals, while consumers find themselves with more money to spend on non-essentials. All of this paints a brighter picture for corporate earnings, and that in turn makes investors more confident about putting their dollars in the stock market. Read that one more time, because that's important, guys. In my opinion now, I'm not a financial advisor, I'm not an analyst, I don't work on Wall Street. I'm out here trying to find ways to build wealth just like you. But you gotta understand what they're saying here, because that sets you up for what's finna get ready to happen. See, a lot of us as investors, what makes us better investors is we go out and we do the research and we look for clues that give us some indication what's gonna happen in the future. And then we can make our investments based on that. That's what this is. It's telling you what has historically happened when rates go down with stocks. So if I'm trying to build wealth with stocks, it's giving me a look into the future. What could be possible? Of course, as interest rates fall, the situation shifts, with borrowing becoming easier and cheaper for companies and individuals, while consumers find themselves with more money to spend on non-essentials. All of this paints a brighter picture for corporate earnings. Corporate earnings. The more people spend, the more earnings, the more revenue these companies make. And hopefully those revenues trickle down to a better bottom line profitability, which helps the stock price. And that in turn makes investors more confident about putting their money into the stock market. Here we go. The S&P 500's performance after past rate cuts. Now, as we await the Fed's next move, let's consider how the stock market reacted in the past to rate cuts. In the past 2 cycles of cuts, from the initial rate decrease, the S&P 500 index rose in the double digits in the 12 months following that move. So basically what they're telling in the last 2 rate cuts, when you look at the S&P 500 over the next 12 months, it's went up by double digits. Saying, guys, that's history. That's not me. That's what history says. Doesn't mean it'll happen in the future, but that's what history says. Those rate cuts were March 3rd, 2020 and August 1st, 2019. And the S&P 500 rose 27% in 2020, and it rose 10% in August of 2019. Over the year to follow, over the next 12 months. Prior to that, rate cuts happened during the Great Recession and a crash in the housing market over 2007 and 2008 period. The first rate cut happened in September of 2007, and this time it took a lot longer for the S&P to climb back to previous levels. But that was a catastrophic downturn in the economy, though, in 2007. It was the great financial crisis. It wasn't just a regular pullback in the stock market. No, this was a full collapse of the real estate market, which is a huge part of our economy. I'm talking about a full-blown collapse with big boy banks and everybody else down the ladder. A little bit different than 2020, a little bit different than August 2019. A little bit different. It's important to note, though, that the Great Recession was a particularly difficult time worldwide. So it doesn't represent a good point of comparison for the S&P 500 today. So I just told you guys, that was catastrophic. That wasn't just the United States, that was the world. So you can't really throw that one in there. What does all this mean for the stock market moving forward? It's impossible to predict what the index will do next, but recent history shows a favorable trend. That said, if the Fed lowers rates as expected or makes an even more aggressive cut this week, this won't ease the borrowing situation for companies and individuals overnight. It will take a series of cuts to produce concrete results. That's why I said, guys, over the next 12 to 18 months, if there are 200 basis points worth of cuts, that's going to be sweet. That's going to be really, really sweet. And over that next 12 to 18 months, I'm going to build a lot of wealth. I'm going to keep buying. I'm going to keep dollar cost averaging in. I'm not going to sit on the sideline and wait for some phantom stock price crash. I'm not going to do any of that crap. I've never done it and I ain't going to do it now. I'm going to keep dollar cost averaging in every single month like clockwork into big boy blue chip. And I'm just going to hold them. And I'm going to watch this 12 to 18 months unfold, take stocks higher, and all along the way, I'm going to be buying stocks all the way up as they go higher and just keep going higher. When we have a pullback and I can get dip season in, I'm going to take money out of cash reserves and I'm going to go to dip season and continue the building. That's how I buy the dip. All this sitting around and, I ain't going to do nothing. The guy on YouTube said to wait 2 weeks and then it'll happen. I ain't worried about no guy on YouTube. I did this for 30 years and it works. You need to get you some experience under your belt so that you know what works and you ain't got to depend on somebody else to tell you what to do. See, that's our problem. We want to sit around and want somebody else to tell us what to do. We don't want to take responsibility for our own decisions no more in this country. All we want to do is sit around and blame somebody else when it go wrong, but we'll take all the credit when it go right. That's what we do. That was my fault. That was the guy on YouTube told me to buy that. He told me to do it. The guy on YouTube. But as soon as you hit a home run, oh yeah, Bill. I did my research, Bill, and I got that one right, Bill. I made a lot of money. Kudos to me, Bill. Y'all something else, man. But the good news is that a potential rate cut this week will get things moving in the right direction. And that could help the S&P 500 follow the recent historical trend and rise in the coming year. Again, guys, if you're going to be in a position to take advantage of any of this, I just walk you through exactly what history says is going to happen now. I just walk you through what history says is going to happen. History says this is going to happen over the next 12 to 18 months. History says this is going to happen. And in March of 2020, within 12 months, the S&P was up 27%. In August 2019, within 12 months, it was up 10%. Those were the most two recent rate cuts. Will that happen again? I don't know. I don't got a crystal ball, but I'm going to go with history. I'm going to prepare myself and I'm going to go with history. Like I said, you got to get down to the description box and click on the Mumu link. Open up your new Mumu brokerage account today. For you people that are just getting started, you stumbled on the YouTube channel, you've been watching for a few days, you're trying to figure out how do I transfer some wealth to myself? How do I get in position to have wealth transferred to me? How do I do that, Richard? Well, you start with the Mumu brokerage app. You got to get down in the description box and click on that Mumu brokerage app. The good folks at Mumu are going to give you up to 15 free stocks when you deposit money into your brokerage account that then you're going to take and buy big boy blue chip, right? When you put $100 in that Mumu brokerage account, limited time offer, you get 5 free stocks. When you put $1,000 in that Mumu brokerage account, you get 15 free stocks, big boy stocks. What do you mean big boy? Well, they're publicly traded. So they're big boy. You don't get publicly traded unless you're big boy, in my opinion. Everybody got a different definition for everything in this world. My definition is big boy is publicly traded. You're going to get 15 big boy publicly traded stocks when you put $1,000 in your Mumu brokerage account. Then you're going to take that $1,000 and do what with it? Take advantage of this thing that's getting ready to happen over the next 12 to 18 months. Now, what you got to commit to, though, is consistently put money in that brokerage account every single month. Well, Richard, where do I get it from? Stop going out to eat. Stop going to the beauty salon. Stop playing golf. Stop going to buying lottery tickets. Stop traveling for a little bit. That's how you're gonna get it. What I found, guys, in my hundreds and hundreds and hundreds and almost 1,000 one-on-ones that I've done in 5 years with people through my company or Financial Consulting, I've done over 1,000 of these things. 1,000 of them. And when I sit down with these people virtually, and they send me their little information, I go through the little information, and I look at their expenses. I would say 95% of the time, people are spending money on crap they ain't got no business spending it on. And then they were wondering why, where am I gonna get the money to invest? Right there. Stop going out to eat. Go to the grocery store and buy your food. Stop going to the beauty salon. Stop getting your nails done. Stop playing golf. Stop going out to party and spending hundreds of dollars a month on boozing and all this other crap people do. Stop all that stuff. Redirect them dollars, put it in your brokerage account and buy you some assets. That's how you build wealth. You're going to give up something in the short term to get everything you want in the long term, guys. That's how you do it. And then what you do is you say, well, okay, I've trimmed down my expenses. I'm lean and mean. I got $1,000 a month, but that ain't enough, Richard. I want to get to that pot of gold fast. I ain't got 20 years. Oh, you don't need 20 years. Guess what you need to do? Get your side hustle. Get your butt off that couch watching NFL football. Get off that couch watching the WNBA. Stop watching all that crap. And take those hours and go out and earn some money. I don't care if it's DoorDash, Lyft, Uber, whatever. Online business, go take those 10 hours on the weekend that you just being a consumer and turn them into being a producer. Create you another $2,000 or $3,000 a month. Put that in your brokerage account. Now you got $4,000 a month going in your brokerage account. Now you got $4,000 a month going in your brokerage account. Let's see what you do with that. Let's see what you do with that. Let's go in here and look at a calculator.net and see what you do with that. Let's see what that does for you. Let's see what that does for you. Because I'm telling you guys, this thing is real. If you would go ahead and just trust the process. Just trust the process. Let me walk you through something here. Let me just show you something here. If you just trust this process for 10 years, trust this process. Let's say you get a 12% rate of return over the next 10 years and you're doing $48,000 a year. How do I get to 48, Richard? Well, guess what I'm going to do? I'm going to cut back on my expenses and I'm going to create $1,000 a month by cutting back on crap I don't need. And then I'm going to go out and generate another $3,000 a month because I'm not going to be sitting on the couch watching the NFL. I'm not going to be sitting on the couch watching WNBA. I'm not going to be sitting on whatever, playing golf all weekend long and spending hundreds and hundreds of dollars a month playing golf when you're not getting paid for it. I'm going to cut out all of that stuff. I ain't going to the beauty salon. I'm not going to the barbershop. I'm not doing no traveling. I'm not buying no new cars. I'm not buying no new houses. And then I'm going to go get me some side hustles. And I'm going to create $3,000 a month from my side hustle or my new business that I'm going to start online. There's $4,000 per month. And guess what? In 10 years, you're going to have about $900,000 in your nest egg. Now, I don't know about y'all, but guess what? I'm willing to give up a little bit to get 900K. Pretty much 900K. That's what I'm going to have. 900K. $845K, $4,000 a month, at least a 12% rate of return over the next 10 years. I just told you, it's happening. It's already happened. So I don't want to hear this, oh, golly, I don't know what to do. I don't know how to do it. I don't, blah, 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 all this other excuses. No, you do. Get down to the description box, open the Mumu account, put you some money in it, get your free stocks, send me an email. I'm going to send you the tutorial videos so you can learn how to do it. And then guess what you got to do? Follow the blueprint. S&P 500 ETF, information technology ETF, Mag 7. That's what I do. That's my blueprint. That's not your blueprint, but it's my blueprint that works for me. That's what I do with my money. When I earn every day, every month, I get the direct deposit. Guess what I do? I take the direct deposit and guess what I do with it? I put it in assets. That's what I do. This ain't that hard, guys. Y'all act like this is some type of, this is my first day on the job and you want me to build a rocket engine for a rocket ship? I don't know how to do this. Ain't that. We act like somebody just brought us into a rocket lab or somewhere and put a suit on us and making us build a rocket ship. No, this is not rocket science. It's open the brokerage account, put you some money in it, and go big boy blue chip and stay in there for 10 years. Just do it every month for 10 years. Period. It's not rocket science, guys, but we want to try to turn it into rocket science because we don't want to do it. We don't want to wait 10 years. We don't have no patience. See, that's the problem though. See, we don't have no patience. There is no patience in this country at all. We want everything right now. I don't want to pay a price for nothing. I just want it right now. And if I can pay you $5,000 to do all of this for me, I'll pay you. Even though it's a scam, I'll take the scam because I don't want to do it on my own. And it's sad. That's a sad state that we're in our country, that we have no patience, we have no consistency, and we have no discipline when it comes to building our wealth. But we'll go on somebody else's job and we will have patience. We will have discipline and we will have consistency to get that check, to make them rich. See, we'll have those behaviors to make somebody else rich, but we will not take those behaviors to make our own self rich. We won't do it. And that's why we're in the sad state of financial mess we're in right now, where you got 150 million people that have no retirement savings. You got 60-something% of our population that lives paycheck to paycheck. Why? We have no patience. We have no consistency, and we have no discipline. We don't. We just don't. And it's a shame. It's a shame. But for you folks on here that want to build wealth, I've just given you the keys to do it. We got a big thing happening over the next 12 to 18 months when these rates will come down. Now, it's not going to happen overnight, just like the article said. It won't happen overnight. So don't think on Wednesday when the first rate cut happens, all of a sudden the stock market should go, the S&P 500 should go to 7,000 points. Don't work that way. Just like the article said, it's going to take time and it's going to have a number of rate cuts that have to be put in place to solidify this thing. But it's going to happen. It's going to happen, guys. See, you got to understand something about the Federal Reserve. They do not want to have interest rates at 5.5%. They can't sustain that long term, and they know that. They know they have to start getting this thing back to a neutral rate. That's where we thrive, and we're at our best when it's at a neutral rate. So they got to get it back down to this neutral rate, guys. And I get what they were doing. Let's make sure we got inflation under control before we prematurely start reducing these rates. And I think they may have waited a little too long. That's why we probably seen a little bit of sell-off in July. We've seen some sell-off in the beginning of August. We've seen some sell-off in the beginning of September. Is because they just waited too long. But I'm okay with that. It allowed us to buy some big boy blue chips at a discount. So now you got to do what? Put yourself in position, and you got to be ready to take advantage of this stuff, man. I just laid it out for you. I just laid it out for you in simplest detail. It's coming. And I've just read you 2 articles that support what will happen in the stock market when it does come. What history tells us will happen. Not that anything's guaranteed. But history says over the last 2 times we've had rate cuts, this is what's happened over the next 12 months to the S&P. So if I'm a brand new and I don't know nothing about individual stocks and I'm just trying to find a good ETF that I can start getting my feet wet, in my opinion, the S&P 500 is a great place to start. Again, I'm not your financial advisor. I'm not here to tell you what to do. I'm just telling you what history says. S&P 500 is a good place to start for somebody that's brand new, a good S&P 500 ETF. Personally, I like SPLG, but that's my personal choice. Doesn't have to be your choice. You go out and do your own homework and figure it out. But please don't sit on the sideline and wait this one out. You can't afford to. You really can't. You really can't. I told y'all at the beginning of January 2024 was going to be a great year. And I stand behind that. I stand behind that. First 6 months of the year, it was amazing. We hit a little bump in the road in July. We hit a little bit of bump in the road in August. We hit a little bump in the road in September. And I think we'll continue to hit little bumps in the road through September, through October. But once we get on the other side of that election and we get into December, in my opinion, we go higher. That's just my opinion. You guys got to come up with your own conclusion. But for me, I'm going to continue doing what? Dollar cost averaging into my ETFs and dollar cost averaging into the Mag 7. And I'm gonna just keep doing that over and over and over. And if we do have a consolidation or a correction inside this continuous bull market, I'll take money out of my cash reserves and I'll buy the dip and just add that to my DCA and just keep moving. Because I know at some point, guys, we're going higher with these growth stocks. And that's what I buy. I buy growth stocks. You guys can go out and buy whatever you want to buy or don't buy nothing. But me, I buy growth stocks because I need exponential growth. Faster than what the market does, faster than what the S&P 500 does, right? I need exponential growth for the plan that I got in place for my net worth. You got to figure out what you want to do. It starts with, like I said, a good brokerage account. Now, some of y'all might have brokerage accounts and that's fine. Use those or get the Mumu and have you 2. Who cares? I got 4. Use them all. They got various things that I use them for. Pretty simple for me. I don't get caught up in a whole bunch of nothing. All I want to do is build wealth. I want to earn, keep what I earn, and build wealth and teach others how to do that. Those that are willing to listen. Now, if you know more than I know, good for you. Perfect. But one thing I've learned about how people work, this is one thing I've learned, at least from being around a lot of wealthy people. See, I spent a lot of time around wealthy people. Whether it be in my banking days, whether it be with people now who are retired and come from all walks of life. I spend time around these people. One thing that I've learned about people that actually build wealth and have wealth, they don't spend a lot of time being negative. They don't spend a lot of time being like hating on people. They just don't do that. Most self-made wealthy people are willing to open up and help people because they're self-made. They understand the struggle. I'm not talking about somebody that got a silver spoon or a gold spoon when they family been rich for 500 years and they just fell into wealth because they just was born into it. I ain't talking about those people. I'm talking about actually people who came out of the mud. I'm talking about people who came out of the mud to build wealth. Those people that I talk to and hang around are more than willing to help. They're more than willing to tell you what they did. They're more than willing to give advice. They're not to hate on people and try to hurt people and tear people down. See, that's of evil. Those people don't have no wealth. That's evil. They're not of good. And you got to be able to discern that, guys, in your life. You got to be able to look at people and listen to people and figure out what side are they on, good or are they on evil? because those are your two choices. I choose every day to follow good. I choose every day to follow positivity. I choose every day to follow God, Jesus Christ. I choose every day to help people. I'm not perfect, but I know what's in my heart and I know what I'm here to accomplish. That don't mean I don't get paid. I know how to get paid too. Do very well at getting paid, but it's not my driving force. My driving force is helping people. That's the driving force. So just remember that, guys, as you go out in this cruel world that we live in. And it's cruel. What you should do is figure out a way to find goodness. And that's what you wrap yourself around and you concentrate on. Find something that makes your heart sing. Find something that makes your heart happy. Find things in life that you can do to help people, guys. It will improve your quality of life. Building wealth is great. It's great. But your quality of life is more important. It's more important in wealth that you find good things to root yourself in, that's positive and that helps people and that helps humanity. No matter how cruel this world is, you always find your light. No matter how dark this world is, guys, find your light. There's light out there. There is light out there, man. You guys are my light, a part of my light. I enjoy coming on here and helping you guys. I enjoy the wealth builders. I love them. I love them. If you want to get yourself around good people, man, and listen, man, I'm not saying from time to time we don't get infiltrated over there. We do, because I told you, evil is going to come where anywhere good is. Evil is going to come anywhere good is, guys. So just know that. You can't keep it out. But I'm good at recognizing evil, and I'm very decisive. I'm not an indecisive guy. So anytime I recognize evil on the wealth builders, I just excommunicate them. I don't have no conversation with them. I just push the button on them. Disappear. Anytime I feel that there's any evil over there, I just push the button on them and they disappear. And I wait for the next one. Because anytime you got a group of people coming together for good, you're going to have infiltrators coming in. Always. The good news is I know how to recognize that. And I'm not afraid to be very decisive. So you need to do that in your life. Anytime you see evil starting to come in, you need to push the button on them. Just push the button on them. That'll banish them. Just got to push the button on them. That's what I do. I don't have anybody around me with bad intentions. Nobody. Nobody in my inner circle is around me with bad intentions. I don't have no evil in my inner circle. Only goodness. Please understand that, guys. Hopefully this information that I'm giving you today will help you get to a point where you can feel comfortable about building you some wealth. Please do that. Like I said, get down in the description box and click on the Mumu link. Open up the Mumu account today. And like I said, they're going to give you up to 15 free stocks when you make a deposit. So if you deposit $100, they'll give you 5 free stocks for just trying out the brokerage app. If you make a $1,000 deposit, they're going to give you 15 free stocks, right? Nice. And then what I recommend you do is consider putting more money in there and then just every month, man, dollar cost averaging into something that can multiply your wealth. And like I said, if you're not understanding that, what you need to do is send me an email through my website. Like I said, that's the second link down in the description box, www.richardfain.net. And here's the email you need to send me. Richard, I've opened my Mumu account. I funded it. Give me the tutorial video so that I can learn how to use the app, but also send me your wealth transfer blueprint 1.0. which gives me the basic things that you're buying to build your wealth. And that way I can take a look at those things. I can see what you say about them. And then I can make a determination if I want to copy that plan or if I just want to create my own plan. Perfect. I'll send you that. But you got to send me an email through the website. And like I said, the website address is down in the description box. Also, I want you to do me a favor is consider joining the Wealth Builders, fastest growing financial community on Patreon. Consider joining the Wealth Builders. We're a group of good people with great intentions to help one another build wealth. That's it. We don't sell nobody nothing over there. We ain't trying to upsell nobody nothing. Ain't no products moving through there. None of that. Ain't nobody going to be in there disrespecting you. And if they do, they're going to have to deal with me because I'm in there every day, all day watching. So if they're disrespectful, I'm pushing the button on them and it's going to be over with. And nobody going to treat you bad over there. I can guarantee you that. And if they do, and you DM me, I'll deal with it. I'll deal with it. But come on over and join us in the Wealth Builders. In the website, all you got to look for is a membership button and there's a join button. Hit one of those buttons, get yourself over to Patreon, sign yourself up, be a part of the Wealth Builders, and then get in there and learn something. Get in there and participate. We got a pretty robust community chat. We also do weekly Q&As. We just had one last night. We do them every Monday night at 8 p.m. So if you got questions, boom, you can throw them out. You can throw them out to me, and the whole, the community will be there. Some of the members in the community will be there. So we have a good time in those live streams, Q&As every Monday, 8 p.m. Eastern time. And then obviously, guys, you have direct access to me through direct message. All you got to do is get onto the Wealth Builders, go onto the main Patreon page, and then send me a direct message. And therefore, you and I can have a conversation, just you and I, without anybody else having privy to it. It'll just be us chopping it up in a direct message format. I do that for all of my Wealth Builders who want to participate in that particular part of the community. You do have access to me every day. I want you to understand that. The only place I do mentoring is through the Wealth Builders, through direct message. I don't do anything through random emails. I don't do it through Instagram. I don't do it through any other venue. And I tell people that when they send me questions, hey, are you a part of the Wealth Builders? No. Well, here's the link. You need to join and then we can chop it up. And that's not being disrespectful to people, but that's not the message I want to send to the people who have made the Wealth Builders what the Wealth Builders is. They're there because they have access that other folks don't have. So if you want access to almost 1,100 Wealth Builders and all the experience that they bring building wealth, you want access to me, then join the Wealth Builders. I think it will be certainly time well spent. All right, guys, I appreciate y'all. It's 12 o'clock. My time is up. Hopefully, you guys are in a position right now where you understand what's getting ready to happen with these interest rates and historically what that has meant for the stock market. I think it means good things are getting ready to happen for our assets, especially growth stocks, growth ETFs. I think the entire stock market would benefit, but I think growth stocks benefit the most, right? Because they take that money and they put it in their growth. And as they start growing, these investors start having more appetite for that particular stock because they're growing again, which drives up the price. So guys, I appreciate y'all, man. Y'all know y'all been good and wonderful. We had a great day today, so thank y'all for the support. I'm gonna be back this afternoon with a little bit of edited content like I normally do. But life is good, man. Life is good. I want you guys to be able to obtain everything that you want out of this life. And I think assets can help you get there. So always continue to wrap your head around how do I build assets and how do I get to my pot of gold at the end of the rainbow? Because I think when you use that wealth as a tool, you can start opening up other things in your life to be able to go chase so you can find that purpose and that passion. Because we know the money part is not going to get us the purpose and the passion. Not the money thing. The money thing is a tool that we use to pay for the lifestyle while we go chase these things. Like I said, if you want to go help baby sea turtles, right? You want to protect them. You want to go make sure that they have a good way to the ocean so they can get in that ocean before them predators get them. You ain't got to worry about how you going to pay for your trip. The Sea Turtle Institute ain't going to pay for it for you. So you got to pay for it out your own pocket. But guess what? When you got wealth and your wealth generating income, you ain't got to worry about the Sea Turtle Institute paying for anything. Nah, matter of fact, you can make a donation to the Sea Turtle Institute. Yeah, you can. See, that's the great thing about having wealth. You can take part of that wealth and give it to the needy. You can give it to your favorite charity. You can give it to your church. You can help deserved family members or friends. Matter of fact, if you want to, like a lot of these rich folks, you can use that wealth, and then when you get ready to leave this place, you can give it all away. Ain't that something? Nobody says you're going to, no one is going to be pulling up with a trunk full of money when they're getting ready to go to their next destination. So you can give it all away. But right now, while you're here, use it as a tool to chase the things that you want to chase when it comes to purpose and passion, right? Well, all right, man, I appreciate y'all. Get down in the description box. Like I said, hey, follow me on Instagram. It's down in the description box. Richard Fame, Millionaire Mentor. Get the Instagram page up again, guys. We got another car coming. It's coming. I'm close. We got another car coming. So stay tuned for that on the Instagram page. Like I said, get down there. Richard Fame, Millionaire Mentor, Instagram link. Give me a follow on Instagram, guys. And then send me a DM to let me know that you're rocking with me, and so that I can say thank you. You guys know I appreciate y'all more than anything. Y'all have given me my purpose. This is my purpose for the rest of my life, is to help people. And this platform and you guys have given me that. No money could buy this. This relationship we have, money can't buy this. The relationship I have with the people in the private mentorship club, the wealth builders, money can't buy that. See, money can't buy that. Right? Money can't buy that. So appreciate y'all allowing me to live my passion, to live my purpose, which is helping people and educating people to get to wealth. That's my purpose and that's my passion. And then the third P is people. Y'all know I got the 3 Ps. People, purpose, passion. Those are the 3 Ps that I strive to chase every day when I wake up. You guys got to find something that you got to chase every day when you wake up to make you feel like you've reached your full potential. See, I feel like right now, guys, I'm at my full potential right now doing what I do with you guys here, because I do it my way and I have a bunch of fun doing it. And I have so many memories over the last 5 years with you guys, so many emails, so many DMs from people saying, Richard, what you're doing on this YouTube channel has changed my life. See, guys, that's priceless. No, there ain't enough hate in this world that can overcome good. You do know that, right? You do know that, right? There's not enough hate in this world, guys, can overcome good. Good is always going to be will prevail over bad. It will. Good will prevail over bad, and I know that. Why? Because I get the emails. See, I get the emails. I get the emails that validate for me what I'm doing is the right thing. I get the emails every day. I've gotten thousands and thousands and thousands of emails, guys, over the last 5 years from people saying the same thing. Richard, you've changed my life. What you do on YouTube, sharing your testimony, your financial testimony, sharing the tools and the financial tools you've used to build wealth has helped me be more confident. I get them every day, guys. Every single day. I get emails where people tell me that. So don't tell me what I'm doing ain't good. It's good. There's not enough evil in this world can overcome this good. It's not going to happen. So thank y'all. Thank y'all very much for that, because that is what it's all about. Well, guys, appreciate y'all, man. Y'all keep on doing what you do. Watch the Fed this week now. Today, it's going to be kind of docile. You see what's going on in the market right now. It ain't crazy. It's just kind of, maintaining. So just stay tuned. Tomorrow's the big day. Tomorrow's the big day to start this next 12 to 18 month interest rate cut run, which I believe will take us to take us higher in our wealth. But you got to participate. You got to be in it to win it. You have to be in it to win it. All right. Well, thank y'all, man. Lock it in with a thumbs up before you get out of here. I appreciate y'all so much. Y'all have a rest of a wonderful Tuesday. And then guess what? We'll be back tomorrow, 10:30 a.m. Eastern time. And then, of course, we're going to have an emergency meeting in the afternoon of Wednesday, emergency live stream. We're on 2 tomorrow. After the Fed come out, do whatever they do, we're going to have an emergency meeting about 6 p.m. that afternoon, Wednesday afternoon, to kind of talk about what the Fed did. And then we're just going to keep moving from there. All right? So lock it in with a thumbs up before you get out of here. Y'all know I appreciate y'all more than anything. Y'all stay safe out there. Go out there and do something nice for yourself today. Go do something nice for somebody else. Don't have no money involved. Put positive in the world so you can get 10 times positive back. Stay strong. Stay long. Thoughts become things. See it in your mind. Hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. I'm going to catch you guys on the next video. In the video 2.